Hey, welcome to the Social 333 podcast. I'm your host, Chris Bentley. Today, my guest is Patrick Pachinski. Pachinski.
That's right.
Yes. Awesome. First time. Cool. So tell the audience a little bit about yourself and what you got going on.
Definitely. Thanks for having me, Chris. So my name is Patrick Pachinski. I'm with Stacking Capital, and we specialize in helping small business owners access anywhere between $50,000 to $250,000 of 0% interest business capital. And the great thing about this is that none of this will report to your personal credit as long as you keep those lines in good standing. And typically you're only paying about 1 to 1.5% of the balance that you're using.
We were talking offline a little bit about this because I ventured into that. As you know, real estate sales right now is really slow. So I got a high debit on my credit card right now. I'm just kind of floating it. I'm pretty sure, the banks know that real estate's slow, especially in Dallas. So they've been kind of cool about it. I've been paying it. I haven't been late or nothing like that. Just I haven't been paying the full amount. And it's been building up. And I looked into not stacking capital, but I looked into just paying at 0%, kind of like a credit card deal. And the reason why is because I've been getting hit up, Facebook works or Instagram, right? They know what you're thinking about,
Look
right?
it up once.
Right. So like I'm seeing all this stuff where people are being interviewed and they're like, oh yeah, like you can get 0% and stuff like that. Talk about your programs. Like, is it like credit card based? Is it bank based? Like, how does it work?
Yeah, great question. So credit stacking itself is mainly going to rely on the person's good credit score. So typically we're looking at having a 700 plus credit score, your revolving debt, so your credit cards, the utilization under 30%, a clean credit profile. So we typically don't want any derogatories on there. And if we're going for business credit cards, then generally what they're looking at is comparable credit on the personal side. So they're going to be looking at your credit card history, the limits, how old they are on the personal side. And that's where we can get into more detail as far as like how much a profile might be able to unlock. That will depend more on the depth of the actual report. But to get the conversation going, if you have a clean profile with a 700 plus credit score, your credit cards aren't maxed out and they've got some age to them, you're typically sitting on anywhere between $50K, sometimes $100K, sometimes more of 0% interest business credit. So these are business credit cards. And what's great about that is that they don't report on your personal credit as long as you keep them in good standing. And let me backtrack a little bit. About 97% of business credit cards don't report on personal. There is like a Capital One, Discover, all the ones that we avoid that will report on personal. So those are the ones you want to avoid typically. And also if you are late on a payment, that you can actually, the 0% could be gone just like that, just from being late from a payment, number one. And two, if you are late, then those trade lines can start reporting on your personal credit.
Wow. So talk to me about the 3Cs framework. Like, how does that work? Is that?
Yeah. So basically, most, whether you're a startup or even somewhat established, most businesses aren't bankable. Like they don't have the 4 legs of becoming bankable, which is basically having that business be an asset and being able to stand on its own. So most people have to resort to their personal credit for any sort of startup capital, right? 0% is the best because outside of your short-term capital for businesses, you're really only looking at 20 to 30% interest rate. So if you're looking at like your revenue-based lines of credit, you're looking at, usually anywhere between 20 to 30+% interest rates on those. And if you're looking at like MCAs, for example, that doesn't even come with an interest rate. They call it a factor rate, right? And you could be looking at anywhere between 40 to 60% interest rates. And if you actually calculate that out over an APR, it'd be like over 100%.
Yeah, one of the biggest things I think, and I fell into this trap as well, is that somebody is an entrepreneur, small business owner, they come up with a great idea or they got like a storefront, they sell whatever, and then they're like, okay, well, you know what? Like, and it happens to everybody. Like, we're growing, we need capital. I need to hire staff. I need more whatever it is, more PR. I need to do more marketing. I need dollars in my hand so I can do different things because I know this will hit. And like I've already seen that it's hitting. I just need like more of it, kind of
Like a
deal.
good proof of concept.
Right.
Mm-hmm.
So then they're like, okay, well, let me go walk down to my bank. Let me go like tell Susie at the bank that I see every single day, like, hey, that I guess those days are kind of over because you just do it with your mobile app, right? But
There's still something to relationship banking, but
yeah, it's not the same
how you think about it
anymore, right? And then that's how it is when I grew up, right? But like you go see Susie and you're like, Susie, like, my company's growing, I need some capital. And then you go talk to like, Richard behind the scenes, and Richard's like the finance guy at the bank. And then Richard, you fill out an application for SBA loan. And for the most part, like you get denied. I got my SBA loan, to be really honest, during COVID, and they were just giving it out. They're just like, oh, like you stick a mirror under your nose and you have a business, and like, cool. Like, how much money do you need? That was kind of like how
back
COVID
in like
worked.
the PPP days.
Yeah, and that's how it worked. And now it's a lot different. But even before then, it was different. Like how. I think that's the biggest thing is a lot of people that are in the business and then they get denied for SBA and then they don't know where to turn. And then either, their business goes to crap or it just takes them longer to scale to where they're going. Like, how can your program kind of help out?
Yeah. So we're actually in a position where there's a lot of credit stacking companies out there, but they are very transactional minded. And we're very relationship based. So from the moment you come on, it's like a 3-step process. So the first thing we're always going to do is optimize your personal credit profile. So our goal is that by the end of us working together, not only are you getting funding, but your personal credit profile is stronger and we're laying the foundation for your business to become bankable. So there's 4 legs for that. And that's what actually makes it easier for you to access SBA and bank preferred lines of credit and term loans at significantly better rates than what most business owners are seeing there. And just to give you an example, we're actually coming in better than the SBA in terms of getting lines of credit for people directly from tier 1 banks like Bank of America, Regions Bank, TD Bank at prime rates plus 0%. So right now that's like about 8.5%. But most people, that's where they go first because they don't even know some of these programs might exist, like the business credit cards. I literally had a doctor that we funded. He's a private client with Chase.
Wow.
And he was literally telling me, my banker never even told me. He's like, we got him like $80,000 from Chase. And he's like, my
Nice.
banker never even told me this was an option. So it's often overlooked, and it could be a very good way to get your business started, especially if you say you have like a good proof of concept. And it actually lays the groundwork for a lot of what I'm talking about in terms of becoming bankable. So one of the legs of becoming bankable is having 10 to 15 reporting business trade lines on your business.
Talk about that. What kind of trade lines are we talking about? Are we talking about credit cards? Are we talking about car leases? Like, what are we talking about?
That's a good question because now we're getting into the whole like business credit building side of things. And there's a lot of noise in that market too. So most people... the way they advertise it is like no personal guarantee, business credit only, unlock millions, whatever, right? And that's just simply not true. Your business can get to the point like where your business is the asset and you're not personally guaranteeing everything. But the truth is that over 90% of businesses are not there and will never get there. And we have the hard data to actually show that. We've done over 10,000 scans on businesses smaller than 20 or less employees. And that was the figure that we got. Around 90, a little over 90% of businesses are not bankable. So they always have to resort to those short-term loans like the OnDex, the Blue Vines, your QuickBook loans, your PayPal working capital loans, and things like that.
How does a company become bankable? That was the thing that's like kind of on my mind. Like, I got a company, right? I got a real estate company. It's been in business for we started in 2020, so 5 years now. Like,
That's a great question.
Obviously, like, we didn't make money because the doors were still open. Like, we had no issues. Obviously, it's a tough market now, but I could show tax returns, no issue, that we're profitable. Like, how does that? If I was like, okay, well, you know what? I'm tired of using this credit card. It's costing me a lot of money. Let's give me a line on my card or on my business.
And that would be the idea, right? And ideally, you're working with a good stacking company that has that end picture in mind, so that we can actually do that before we even go for your first round of 0% cards. The end game is in place, and we're taking action based off of that plan. And that's the problem with a lot of credit stacking companies. I'm going to go into the 4 legs of becoming bankable.
Sure.
But if you were to ask most credit stacking companies what is a bankable business, they probably wouldn't be able to answer you. So the first leg is lender compliance. There's about 20 lender compliance items that the bank is going to look at in your business before they even pull your personal credit report. So we have a very similar software that is able to do that. And the reason the banks do that too is because, again, they want to see if if your business is compliant on paper, because otherwise they can't repackage it and sell it, right? And they're not going to bother spending $20 and paying Equifax, Experian, or whatever to get your report if they could just run a simple scan like that and pre-disqualify you before you even apply. So that's the first, like, lender compliance. And it's little things too, right? So when I mean lender compliance, it's things like if you have a P.O. box or a home address as your business address, little simple things like that. Your NAP, your name, address, phone number across everywhere. Google, your directory listings, are they all showing up as the same address, right? Do we have address consistency across the Secretary of State, your business bureaus with your banks? So your phone number, a lot of people use their mobile number or something. That needs to be a landline as well.
Wow.
So it's little things like that on the lender compliance side, and that's really just one leg of becoming bankable. The second leg is building business credit. So let me go into a little detail on that. When I'm talking about business credit, the main one I'm talking about is your FICO SBSS score. This is lending in 2025, and this is sort of where lending is going and trending towards is a FICO SBSS score. We're looking at build one above 160 plus. And what a FICO SBSS score is, so this is going to show you how this whole no PG EIN only credit's like somewhat of a complete fallacy. Your FICO SBSS is a combined score of both your personal and business credit scores. So we're looking to have a 160 plus there and a 70 plus across the rest of the business bureaus like Dun & Bradstreet business. So that's your second leg, the business credit scores. The third leg, very similar to like your personal credit profile, you have a score and then you have trade lines, like accounts reporting on your report. So that's the third leg of becoming bankable. We want to have about 10 to 15 trade lines reporting. And earlier you asked like what kind of trade lines, because that matters too.
Right.
And oftentimes in that whole, because it's almost like a different world, the business credit building side, I always make fun of them because I'm like, they're going to have you buying pointless toilet paper and office supplies just to get some net 30s reporting on there. And that's not what we're actually looking for. We ultimately, what we want is very similar to like on the personal side. If we're looking to unlock high limit business credit cards as your first initial seed round, we're looking, or the underwriters are looking for comparable credit on that side. So there's no way that you're going to unlock high limits on the business side if you have, let's say on the personal side, a credit card with a $500 limit that's only a year old.
Right.
So very similar here. We're looking for actual business financial trade lines to report comparable credit. So that way, if we're getting ready to ask, Bank of America for a $200,000 term loan or line of credit, they already see some reference there. And these are things that we actually help you with too. So let's just say you don't have a financial trade line like that. For starters, this is why 0% is such a great seed round, because that helps lay the foundation for that. Not all of them are going to report, but that's why we stack them. Again, you're getting that 0% interest capital almost instantly. I don't want to say instantly because it really just depends on where you're at. But generally with a 700 plus credit score, if you don't have anything in the way, such as like negative items, a bunch of inquiries, somebody can get funded as early as 7 days. We're getting approvals.
Wow.
And then the cards just, take whatever it takes to get the cards in the mail, like 7 to 10 business days. So that is getting into the third leg, right? We want 10 to 15 business trade lines reporting, and we want comparable credit. So they can't all just be like pointless net 30s on there. The net 30s, they have a place, and if you don't have a business credit score, you need like anywhere between 3 to 5 trade lines to start generating a score. So that's where those come in place. But we have a slightly better, faster way to generate that score without buying all the pointless toilet paper. And it would be so nav.com. I'm not sure if you've heard of it. So that's a service very similar to almost like just think of it like as Experian or Credit Karma, but on the business side. So it's giving you some it's giving you some details about your business and also giving you your business credit scores. But it also helps because that's going to report as a trade line. And you can actually get up to 2 trade lines. They have this other product on there, which is like a charge card, and they've changed it a lot over the years. But essentially, just with that product alone, you're getting value out of it because you're able to see your business credit scores and some insights on your business, and you're getting up to 2 trade lines on that one. Then there's another one called Fair Figure, very similar, where you're getting 1 to 2 trade lines from that service. And then there's a service called eCredible. So eCredible, there's a personal and business side to that, but the business side, what eCredible allows you to do, this is really good for businesses that have maybe been already in business for a while. You might already be dealing with certain vendors. They're just not reporting on your business credit reports. eCredible will help post those as payment experiences on your business credit reports.
So, like, we talked a little bit offline about me just trying to find somebody to, just kind of help me out, whether it be a line of credit or, just another credit card, something like that. And I've heard of people like rolling over their card to like another card and that kind of stuff. And I'm pretty old school, so I'm just like, well, like I'll just take the mulligan and just like continue to go until, I get the thing done. Obviously, you take it off your taxes and interest and stuff like that. But what is it that, because I know it was like I think it was like $7,000 or something for them to do it. And I was like, well, like, I'm pretty sure I can kind of figure it out. Like I can watch some YouTube videos and like kind of do it. But like yours is a little bit different because it sounds like it's not so much just helping me apply for a credit card or some lenders that kind of like hook me up. It's more of like, hey, like we're going to do this long term, build you out, build your company out. So if we get past this high credit card bill, and obviously the real estate market is going to pick up in my case, right? So then I can turn around and later on down the line, if I want to build another office or if I need, I don't know, a Lamborghini to go run around with, right? Or whatever it is, right? Like I have a line of credit to kind of go off of, which is really, really cool. But what is it outside of, I think it's not really a scam, but I think it's more like a middleman taking advantage of somebody kind of situation. But what do you kind of see in terms of like red flags or like things that you should watch for, or like, I don't know, just some kind of, because there's just, once you get into a position like kind of where I'm at, where you're like, okay, well, like I don't really have a lot of money coming in like I used to. I still have money coming in, obviously, but it's not the same. My credit cards are getting like going up every single month, trying to float the company, or reverse, like you're a new company and you just need some money. Like what kind of scams are really out there? Like what are some red flags that some people can kind of identify and be like, no. Like
Definitely.
We're not doing that.
No, I'm glad you asked. And just to wrap up the last one, the fourth leg.
I'm sorry.
No, it's fine. It's me because I tend to get on a tangent and stuff. The last fourth leg, just in case somebody was like, what's the fourth leg, is having your financials in order. Okay. So if your business can have the tax returns for the last 2 years, solid bank statements in order, and then what we call an L5 bank rating, which is basically just saying that you have $10,000 or more in that bank account for the last 90 days as an average daily balance. Those are the 4 legs. As far as things to look out for, again, you're absolutely right. Like when most credit stacking companies are going to think in a very transactional way. So what he was offering you is probably very different. It's more of just like a patch, like, hey, let's just move this over, pay me $7,000. For us, it's more like, how can we get you out of this hole to actually set you on the path to becoming bankable, right? So for us, I'm just going to preface this by saying, like, it's a lot easier to go for funding when you don't need it. the banks can smell you from a mile away. That being said, I mean, that is where we come in because most credit stacking companies just have a cookie cutter approach. As a matter of fact, we got a client right now. He's gotten $500,000 in funding. We literally just got him on board. And he's noticing that the same stuff that he did for his first and second round aren't really working anymore for his third and fourth round. And spent a lot of time on that consultation call. We do that for everybody because, again, it's not a cookie cutter approach. Right. And we definitely want to see if, number one, we can help. And then two, after that call, they pretty much have a solid plan as to what they need to do, whether they do it with us or without us. And then from there, it's just getting alignment on whether you're with this plan or not. The problem is on my side, there's a lot of people thinking very transactionally, but there's a lot of clients or maybe prospects that never make it that far that also tend to think very transactionally too. I can't, it's sometimes very hard to get them to see that road to becoming bankable. And they're really just thinking about it very transactionally. So, and real estate investors are actually one of the biggest culprits when it comes to that, like really? All the time. They're like, oh, I don't know, 100K, 7 points, this, that. And I'm like, you're missing the whole point. Meanwhile, this guy's got like a HELOC maxed out at 70%. I literally came up with a plan to pay that down, get his house back, put it on an unsecured line, put it all on the business side so that his credit score shoots up to 800. And it becomes a sort of like the goose that lays the golden egg, right? So it's like we're moving things over and putting you in position so that you don't ever have to be in that place, right? So, and I try on that call to get him to see that, but you can't save everybody, right? And then a lot of times going back to that situation like yours, this is where we come in because it's not cookie cutter approach. So we do come up with plans, and sometimes we can't. Like there's literally this is why I'm so happy we're here, because I've been doing this since 2021 and I've been around long enough to see like what works, what doesn't work. People coming from other funding companies before they even finish their rounds. So I've seen a lot. And like I told you offline earlier, also like back in March, I went through like an extremely humbling experience. Like I had two partners, they completely screwed me over, took the entire sales staff, deleted company assets, all kinds of stuff. But it needed to happen. I'm so glad, because not only was I able to find myself, I was literally able to find also like who we are. Like, and I tell people, if you would ask me like a few months ago, oh, you guys are more expensive than this person, I would have like, oh, okay, no problem. They're bigger than me. They're more popular. We'll cut the price or whatever, right? But now, like I said, I know exactly why we're here. We're not the most expensive either. I mean, there's courses that are more money than what you get from us, and we're a one-to-one advisory, right? So yeah, it just makes me very happy that, what's been great too? Like these podcasts actually get really good clients. So like these types of podcasts get people that are already problem aware. They know their situation. They've probably already looked into it, and they can already see like, okay, yeah, you're right. Like everybody I've talked to just wants to get me on a call, guarantee me some really high approvals. And it's always different once you're on the other side.
Yeah, I mean, that's kind of when I started talking to you offline, I was like, after I get past this point, I'll probably end up having just a line on my business for stuff, whatever I need, and not have to rely on my credit card as much, which is really kind of like what I want. And I kind of guess that that's going to be something that if I decide that I want to sell later on, or if I want to franchise out, I'm sure that's going to be like having the company bankable is probably going to be like a huge asset.
It makes it more exitable, 100%.
Yeah. Which I think nobody really even thinks about, because I've never even thought about it till I just like sat here and listened to you.
Yeah. And then, some people might also be thinking of like, oh, I got really big ideas, franchise, this, that. I mean, that bankable path might not even be enough. Like you might need to go into raising rounds or private equity, something like that.
Right.
But guess what? That's just the next natural ascension from becoming bankable. And guess what? Like we have actual partners too. So throughout this whole process, like, everything from like accounting services to marketing services, everything that we use that we've gotten success from, we do a really good job at making sure that our clients know about it. So I have a lot of clients that are also consultants or in the coaching space.
Nice.
We're getting right now like 8, I don't even want to say it online, but like for the finance space, we're getting book calls at like rates, numbers that you don't usually see, right?
Wow.
So these are things, again, I tell everybody, like the funding is really just the beginning. You know, we want to set you up for 0% funding as quickly as possible. We want to make sure that you're set up for another round of 0% funding. And then we want to make sure that once we have that funding, that we're devoting a little bit of time and a little bit of that funding towards becoming bankable. And again, it doesn't have to take much time, but it does need attention and a strategy behind it.
Patrick, if somebody wanted to get in touch with you, learn more about, obviously stacking some capital, 0%, or maybe even, getting the four business legs set up so they can do becoming business bankable.
Yes.
Like, how would they go about doing that?
Yeah. So I mentioned earlier, the banks have a system that they can just run a scan on your business to look at the compliance items to see if that's out. That way they can pre-qualify you before running your credit. We have something very similar. So
Cool.
If you go to stackingsuccess.com, it'll literally just take you 5 minutes to run a scan on your business. And by the time you're done, you're going to get a login and username and a summary of what programs you're actually pre-qualified for right now, and what compliance items are either in or out of compliance.
Wow.
So
And that's
everybody
all on your
just,
website?
oh yeah, they get access to that platform, and that first leg they get access to for free. And then once they come on board as clients, that's when we start to unlock everything and work on the second, third, and fourth leg of
Very nice.
becoming bankable.
Patrick, I appreciate you coming on the show. Learned a lot.
Thank you so much, Chris. Thanks
Thank
for having
you.
me on.
Bye-bye.
That was awesome. Thank you.
Cool, yeah, no problem.
Yeah, and if, like I said, it would take strategy.